Here's a look at the effects on natural gas prices so far. It is down 4 cents to $4.22 per thousand cubic feet today. Also, crude oil trading down a bit this morning, down 49 cents, now at $79.09. Joining us now to analyze the oil and gas markets, our regular Thursday morning guest, Elliott Gue from the Energy Letter and the Energy Strategist. Elliott, great to have you back with us.
Good to be here.
Let's start first of all with that announcement from China and the U.S. on shale gas technology. Conventional plays in China, not necessarily expansive, but it sounds like there's great potential for shale there.
Yeah, actually it's a lot of potential for shale to be developed in a lot of different parts of the world. There's been talk about developing it in Europe, China, and parts of the Middle East as well. The problem really has been infrastructure again. In the United States, it's no real mistake that Haynesville and Barnett have been among the two that are seeing a lot of investment. There's a lot of existing infrastructure in terms of know-how and technique to develop in Texas and Louisiana. Doesn't necessarily exist as much in China and other countries.
Given China's potential consumption, Elliott, what do you see that could change in terms of power generation usage if they're able to tap unconventional reserves of natural gas in China, and if the U.S. technology really proves well there?
Well, it could be a much larger part. Right now, China is heavily reliant on coal for electricity generation. It's something like 80% of the grid. And they're talking about seeing a lot of growth across a number of different technologies, nuclear power, alternative energy. But when you look at the actual percentage of the entire grid, it's not really growing that much. Even if they double it, it's still a very small portion of the grid because coal is so dominant. But natural gas could certainly be part of that. Certainly China has done a lot to lock up liquefied natural gas supplies, particularly from places like Australia. And I think you're going to continue to see a lot of that. And it could certainly be a much more important source of power in China. But even if it's still a very small portion of the overall grid, it implies an awful lot of growth because their power demand is growing so quickly.
Let's talk briefly about the world outlook and the IEA report issued within the last 10 days. Just yesterday, ANGA issued a report trumpeting the abundance, the affordability of natural gas as a solution here in the U.S. What do you read between the lines in terms of the IEA's report on nat gas?
Well, I think natural gas, people are just starting to realize really over the last year or two that the U.S. has an abundant supply of natural gas. Just 3 or 4 years ago, everybody was talking about more LNG imports being needed in this country to meet coming demand for natural gas. So it's really been a total sea change. Just over the last 3 or 4 years, companies have proven that they're not only able to develop these reserves, but they're able to produce more gas than we can ever use domestically. So I think that natural gas is going to become a much bigger story in the U.S. I think that it could be a very fast and easy way to reduce, for example, greenhouse gas emissions, other types of pollution as well. You're certainly seeing a lot more gas plants being built in this country simply because they can be put up very quickly and they don't have the environmental issues that coal plants do. So I certainly think that's something you're going to see more of. Internationally, there are a number of new LNG projects that have come online recently, a number of new LNG export projects scheduled to come online over the next year or year and a half. And really, at this point, there's a concern about a glut of gas, just too much gas out there in the form of LNG that just has no home. So whenever you see a commodity like that, which is sort of oversupplied, whereas oil and other commodities are sort of in tight supply, it's likely to come a time when they're going to develop a market for it. In other words, more gas generation being built.
Let's talk briefly, Elliott, about the intersection of oil and gas right now. Two topics. The first is the result of Hurricane Ida, or what was actually a tropical storm once it rolled through the Gulf. We reported how many facilities were taken offline because of that. Any residual effects that you're seeing?
Not really. Most of it's come right back up online. Certainly nothing like we saw a year ago with the hurricanes that passed through a little bit further to the west about a year ago, which we saw that really lingered well into this year, where some production was offline for months. This has been a very quick down, coming offline and then coming right back online.
What about Devon Energy, an oil and gas heavy, and it announced a plan that you had discussed at length over the last several months, that is selling off to bring in assets, to bring in cash, get some balances off the sheets. It seems to be typical of a lot of companies.
Yeah, you're definitely seeing a lot of the big producers are selling off a lot of their conventional type production, selling off some of their slower growing assets, and focusing more of their money on where the growth is going to come. And on the oil side, a lot of money is being funneled into deep water projects. Devon is a player in a number of deep water fields, and the deep water, what we're calling the deep water golden triangle. which is offshore Brazil, offshore Gulf of Mexico, and offshore West Africa.
I know you love the Brazilian plays.
Absolutely, absolutely. And they're very exciting plays down there. I mean, some of the largest, Petrobras just announced earnings earlier this week and also had an update on their E&P operations. That's, of course, the national oil company of Brazil. And they reaffirmed that the Tupi field, is a 5 to 8 billion barrel field, which makes it one of the largest fields discovered in the world in decades.
Looking ahead now, let's take one final question, Elliott, about oil. And I want to quote Victor Schum with Pervin and Gertz. He had said that the resistance to oil sustaining above the $80 level is very strong, and that's what we've seen over the last 2 weeks or so. No lower than $78 and change, and for most days we get above 80 briefly before dropping back down. So is that the sweet spot you see right now?
That's the sort of technical resistance level. Earlier this year it was really more around 74, 75. Oil took several months to reach that level. Now it seems to be sort of the 80 to 82 range is sort of the technical resistance level. I do think 80 is an area where if oil prices can sustain that level, you will see more money flowing back into investing in new exploration and production projects. One of the things we heard from all the oil services firms is that producers, national oil companies, integrated oil companies, and the smaller independents are all saying that the problem isn't so much where oil is trading, it's how volatile it's been. In other words, right now oil is at 80, but there's a concern that what if it goes back to 58 or 60?
And it wasn't that long ago we were at 32.
No, exactly. And certainly last summer we had oil prices under 60 for a while. So producers are not able to make money necessarily on some of these big projects and certainly don't want to commit billions of dollars of capital if they're not sure that oil prices are going to be sort of stably around 80. So I think that a level around there is probably where oil needs to be to bring the needed investment on stream. And these are multi-year projects and billion-dollar projects.
Elliott Gue is with the Energy Letter and the Energy Strategist as well, a regular Thursday analyst for oil and natural gas issues. Elliott, always good to see you.
Thank you very much.
All right, enjoy your day.